All right, inflation has been one of the top concerns for the U.S. economy in 2024. We know, and it looks like fears over sticky prices will continue in 2025. Joining us now is Yahoo Finance's Alexandra Canal. Allie.
Hi, Josh. Yeah, the future of inflation next year largely depends on who you ask. The Federal Reserve sees core PCE inflation hitting 2.5% in 2025 before slowing to 2.2% in 2026 and finally reaching that 2% target in 2027. Consensus estimates, though, they're a little less optimistic. According to the 58 economists surveyed by Bloomberg, core PCE is expected to reach 2.5% next year, but less of a deceleration is expected in 2026, with most economists seeing inflation settling at around 2.4%. Now, a big reason for that lies within the future of economic policies implemented by President-elect Trump when it comes to tariffs on China and other trading partners, along with curves on immigration and tax cuts for corporations. All of those policies have been viewed as potentially inflationary by economists. Now, there are some who are certainly more bearish than others. Nobel Prize winner Joseph Stiglitz falls in that camp. Here's what he had to say at our Yahoo Finance Invest conference earlier this fall.
We are in the soft landing, but it ends on January 20th. And that's when we start getting into a harder place where we don't actually know where we're going to go. That uncertainty, by the way, is not good for the economy.
So he believes the U.S. economy could fall into something he's described as an inflationary spiral, potentially leading to a tit-for-tat trade war, which would significantly weigh on growth. BNP, meanwhile, it's one firm who issued a grim 2025 global outlook due to, quote, a substantial rise in inflation from late 2025 into 2026 amid the rollout of those tariffs. BNP sees CPI settling at 2.9% by the end of next year before climbing to 3.9% by the end of 2026. It does not anticipate any Fed rate cuts next year as a result. So zero easing expected. Deutsche Bank is another firm that also shares that view. Others on Wall Street see between 2 and 3 cuts, so more aligned with the Fed. But I spoke with a lot of economists for this story, and there just seems to be so much uncertainty. There are so many different scenarios when it comes to how tariffs could be rolled out. Clearly, this is something that the Federal Reserve is watching incredibly closely, especially since we've seen sticky prices in recent months. Shelter being one of the most notable, one of the most significant areas when it comes to those high prices. That is expected to decelerate over the course of next year, but still could remain somewhat elevated. The services economy also anticipated to remain hot. So think services like insurance, airfares, healthcare. So if you're a U.S. consumer, it's quite possible you won't see much relief. But the encouraging thing here is that the economy has remained incredibly resilient. Growth is still strong. Consumers are still spending. The unemployment rate remains low, so still a good backdrop heading into next year, if nothing else. And that's something that economists can agree on. So a lot of possible directions and certainly a lot of things to watch in 2025.
Absolutely. We'll be here spectating and analyzing all of it. Allie, thanks so much for taking the time. Appreciate it.